the following data, calculate GNPFC, that is gross national product at factor cost, NDPFC, net domestic product at factor cost, and national income. Always remember, whenever they say national income, they are talking about NNP at FC, net national product at factor cost. Now, looking at the question, we've been given data for private final consumption expenditure. Okay, so whenever we have private final consumption expenditure as one of the items, perhaps this can be solved using the expenditure method. Okay, so under the expenditure method, we can calculate GDP, MP. Okay, that's the formula. And the reason I'm taking gross over here is because we've been given gross domestic fixed capital formation. Alright, and I'll explain further. GDP MP is equal to C, which is consumption expenditure, plus I, and to be very specific, gross investment. Okay, so gross investment expenditure plus G, which is government expenditure, plus X minus M. Do this much and you'll get GDP MP. Now, what is C? Private final consumption expenditure. C is right here. Okay, what about investment? Investment itself in this question is broken up into smaller parts. So we need the formula for investment or gross investment. Okay, so gross investment, if you will, is equal to GD, okay, gross domestic fixed capital formation. Okay, so if you want, you can write it like this or in full forms. Okay, so gross investment is equal to gross domestic fixed capital formation plus what we call changes in inventory. Okay, and when we say changes in inventory means your stock. Okay, and here we have stock. But what do you mean by change? In the beginning of the year, you have a certain amount of stock. By the end of the year, you have a certain amount of stock. The difference between the two. Okay, so if you want, we have a sub formula. Changes in inventory. Changes in inventory is equal to closing stock. Okay, and I'm writing it in full form this time around. Okay, just remember, closing stock minus opening stock. What you have at the end minus what you had at the beginning is your change in inventory or stock during the period. And if you're running a business, the inventory that you have, the money that you have in inventory is a form of investment. Okay, it is not what we would call fixed investment, okay, or investment in fixed capital, but in working capital. At the end of the day, that money will be earned through selling your stock, and you use the money that you get from sales in order to produce more. Anyway, going forward, do we have everything we need for gross investment? Yes, we do. Okay, so what we have over here corresponds to I. Now we have a line item called consumption of fixed capital. Always remember, okay, unnecessarily so many words are being used. At the end of the day, this is nothing but depreciation. Okay, so this means depreciation. And why do we need that? Going forward, we'll require. For now, we have identified C, we have identified a part of I, government, G for government, okay, government expenditure right here. Then closing stock, as I already told you, it's part of our inventory calculation towards calculation of closing inventory. Subsidy is part of what we call net indirect taxes. Okay, so we'll be using that going forward. Just keep in mind that subsidy is part of net indirect taxes. Net exports, by the way, is nothing but exports minus imports. That means this entire thing together, okay, this entire thing right here has been looked after for us. Okay, what we have is X minus M. Now, wages and salaries is not part of the expenditure method formula. It is part of the income method formula. Alright, so for now we can ignore. This is net factor income from abroad. We write it as NFIA for short, and we'll be using it going forward. Indirect tax again is part of our calculation towards factor cost, where we subtract net indirect taxes. Okay, so for now I'm just going to label these as NIT, and when I'll give you all the formula for NIT going forward. Opening stock again is part of investment. Okay, and we've been given profit before tax. And again, profit before tax is something that comes as part of our income method calculation and not expenditure. So we really, for now, do not need these two line items. Going forward, I need to calculate changes in inventory. Okay, changes in inventory is equal to closing stock, which is 300, minus opening stock, which is 150. So 300 minus 150 gives me 150. And that 150 comes over here. Okay, changes in inventory. So my IG is equal to GDFCF. How much is that going to be? 370. Okay, so we have 370 plus 150. Okay, and it's always good to use a calculator. I think this is 520. So when we're calculating for C is 950. Okay, IG, I have just calculated 520. Government is 410, and X minus M, they've given us as minus 50. So plus minus gives us minus 50. Okay, and I'm just going to repeat that over here. GDP MP is equal to private final consumption expenditure. Okay, so that is 950 plus gross investment, which we have calculated as 520, plus government expenditure, government final consumption expenditure, this entire thing, government expenditure, 410. Okay, plus or minus net exports. In this case, it is minus. So we have net exports negative 50. Okay, doing this much, we will get ourselves GDP MP as, and now I'm going to use a calculator. Alright, we have 950 plus 520, okay, 520 plus 410 minus 50. Okay, so we end up with 1830. Okay, and remember, everything's in crores, but it's fine. 1830. That is GDP at MP. These guys want GNPFC, NDPFC, and NPFC. Okay, so I need to, if I want to move from GDPMP to GNPFC, I need to change a few things. Alright, so if I want GNPFC, what's changing? Gross and gross remain the same, but domestic must become national. Always remember, if you have domestic, okay, and I'm going to write that down somewhere over here so that you understand this. Whenever you have domestic and you want to reach national, what you need to add to get there is net factor income from abroad, NFIA. Do that and you'll get national. Okay, and by the way, here it is. Okay, apart from that, so domestic to national, done. Market price to factor cost, how do we do it? If we have market price, MP, okay, if we have market price and we want to reach factor cost, we need to subtract something called net indirect taxes. And that itself is a separate formula. Net indirect taxes is equal to indirect tax minus subsidy. Okay, so we have 1830. If I want to start with GDP MP and I want to move from domestic to national, I must add NFIA. So I will add NFIA. And then I must subtract net indirect taxes, or what we will call NIT. Okay, so I will do like this. I'm going to calculate NIT downstairs over here. Indirect tax is 180. Okay, so indirect tax is 180 and we've got subsidy somewhere upstairs. So let's look for it. Okay, do you see it? Subsidy is right here. Okay, both of them have been marked NIT. Okay, so we have 180 minus 80. 180 minus 80, I think, will equal 100. Okay, so I know that NIT is 100. I know that NFIA is minus 40. I know that GDPMP is 1830. So I can now, okay, and remember there's an equal to sign here, by the way. Okay, so now I can say that GNPFC is equal to 1830 plus NFIA. Okay, and NFIA itself is a negative number. So if you want for now, you can write it like this, but understand it's basically minus 40. Okay, and again minus net indirect taxes, which is 100. Okay, so it's going to be 1830 minus 140. Okay, and again I'm going to use the calculator. Minus 140. Okay, which gives me 1690. 1690 is going to give me GNPFC. So if you want maybe one line like this, therefore GNPFC is equal to 1690 crores. Now, if you have understood how this is done, okay, what do they want next? NDPFC. Okay, so what is changing? First of all, I'm going to go back to our original number, which is this. Okay, and I'm going to match it just like last time. So GDPMP is what I have. And these guys want us to reach NDPFC. NDPFC. So NDPFC will equal GDPMP. And now in order to move from gross to net, always remember, if you want to move from gross to net, you must subtract depreciation. And they've used a very fancy term for depreciation. Okay, and let's go back upstairs to read it. Okay, we have consumption of fixed capital, 20. Okay, so no problem. We have depreciation. So NDP, gross to net, we must subtract depreciation. We must subtract depreciation. Or simply D if you want. Okay, then domestic is the same. Market price to factor cost, which we have already done here. We subtract net indirect taxes. Okay, so we are starting with 1830 crores. We are subtracting a depreciation. Okay, our depreciation is 20. We have depreciation as 20. So we subtract 20. And then we go ahead and we subtract net indirect taxes, which is 100. Okay, so again, I'm going to do this on the calculator and get the number. So we have, okay, and I'm resetting this. We have 1830 minus effectively 120, which is 1710. 1710. Again, I'm going to squeeze this in over here before we go downstairs to the last one. Therefore, NDPFC is equal to 1710 crores. Now, we go for the last one. They want national income, which remember is always an NPFC. Okay, so I have run out of space. I'm going to do it downstairs. And I'm again going to start from the first value that we got. Okay, so we had GDP MP and these guys want NNP FC. So to move from gross to net, I know that I need to subtract depreciation. To move from domestic to national, I have to add net factor income from abroad. And to move from market price to factor cost, I must subtract net indirect taxes. Okay, so going back upstairs for the values. Okay, 1830 minus depreciation, and I'm going to go back up here anyway to note the depreciation. is 20, net factor income from abroad is minus 40. So depreciation minus 20 plus net factor income from abroad, which is minus 40. Okay, we'll deal with the brackets later. Minus net indirect taxes, which we have done over here, and we know it is 100. Okay, so we have 100. Okay, and I'm just going to open the brackets first, then we can do the math. Minus 20 plus minus 40 minus 100. Okay, and even though it is rather simple, I'm not going to risk it, and I'm going to use the calculator, which is something I strongly suggest you'll do in the board exam. Nobody is watching you, do not show off, use the calculator. Okay, 1670, 1670. Therefore, NNP at FC is equal to 1670 crores.